Do you know what is Fintech? Fintech is an acronym that stands for financial technology. It's an umbrella word for technologies that augment, digitalize, or disrupt traditional financial services. The term fintechs refer to programs, algorithms, and applications that can be used on desktop computers as well as mobile devices. The use of fintech platforms makes routine financial transactions possible, such as the depositing of checks, the transfer of funds between accounts, the payments of bills, and the application for financial helps. To enhance the knowledge and skills in identifying and understanding the development and framework of the fintech industry in Malaysia and Singapore, we are focused on the fintech overview, milestone, performance, Sharia framework and governance, overview of the companies, the line of service or products offered, issue and challenges. The overview of fintech industry in both countries. Fintech industry in Malaysia. In Malaysia, there is a growing amount of interest in and work being put into creating Islamic fintech. Malaysia has demonstrated consistent growth at the global and the regional level of the fintech industry. It has emerged as one of the region's most dynamic financial technology markets in recent years. Even though the Islamic fintech ecosystem is still young, it has enormous potential for quick development. The majority of Malaysia's effort in the financial technology sector have been concentrated in the wallets and payments field. This is because mobile and online commerce have created a significant demand from underserved customers and merchants. This trend has also been backed by Bank Negara Malaysia's agenda to speed up the country's transition to electronic payments, which has speeded up the pace at which the country is able to reap the cost-saving and other various benefits that are subsequent to this transformation. Fintech industry in Singapore. The development of fintech in Singapore has increased the need for digital payment capabilities, virtual banking experience, and buy now pay later contracts. Fintech presents a unique opportunity for the development due to the convergence of technological drivers, the availability of investment from an investor, the Monetary Authority of Singapore, in collaboration with other government agencies, industry group, accelerators, incubator, and the industry itself, has been aggressively promoting fintech in Singapore through establishing a thriving ecosystem. Due to the accessibility of digital offer, a fintech platform that provides Islamic financial service can offer cross-border solutions, reaching scalability and efficiency. The integration of Islamic finance with the fintech industry will be able to supplement the existing array of financial services and products as a leading financial center in Singapore.
The milestone of the fintech industry in both countries. In Malaysia, fintech industry was started in 2015 by all founders. The Alliance of Fintech Community was launched in September 2015 by the Securities Commission of Malaysia. In 2016, the Financial Technology Enabler Group was set up by Bank Negara Malaysia. Then, the Fintech community in Malaysia established the Fintech Association of Malaysia in November 2016. On November 2017, the Malaysian government launched its Digital Free Trade Zone, and MDEC has introduced the Malaysia Digital Hub to support local tech by providing the facilities to help them to expand globally. In March 2018, BNM's Interoperable Credit Transfer Framework Policy was issued. While in Singapore, they have established more organizations to develop and support its fintech sector in 2014. Then, in 2015, the Financial Sector Technology and Innovation Scheme was committed to setting up infrastructure and innovation labs. Singapore Fintech Festival was launched in mid-year 2016 and recognized by the Monetary Authority of Singapore. In 2018, the Monetary Authority of Singapore launched the International Finance Corporation, Asian Banking Association with the Asian Financial Innovation Network. Then, API Exchange launched an online global fintech marketplace and sandbox platform for financial institutions in 2018. Performance of the fintech industry in both countries. If you see from this table, it was shown increasing from 2017 until 2027 for 4 segments of fintech in Malaysia. The top and higher segment is a digital payments, whereby increasing from USD 5.6 billion in 2017 and forecasting to USD 43.79 billion in 2027. Then followed by new banking segment. Same goes with Singapore countries, which was shown increasing from 2017 until 2027 for 4 segments of fintech in Singapore. The top and higher segment also dominated by a digital payments, whereby increasing from USD 4.31 billion in 2017 and forecasting to USD 41.23 billion in 2027. Then followed by new banking segment, same with Malaysia.
Assalamualaikum warahmatullahi wabarakatuh. Today I would like to explain about the Sharia framework governance in Malaysia and Singapore. Sharia governance in Malaysia is a set of rules set by the regulator to be followed by all Islamic financial institutions in all aspects of banking operation. Bank Negara Malaysia has established a Sharia governance framework for Islamic financial institutions effective from 1st January 2011. It can enhance the role of the board director and the Sharia committee and management of Sharia matters, including enhancing the main relevant organs in performing Sharia compliance and research function. The organisation structure of the framework depicted in figure below shows the Sharia governance infrastructure divided into 2 levels consisting of 2 important components, which are the Sharia Advisory Councils at the Central Bank and the International Sharia Committee established in each IFI. MPS has finally authority over any financial matter related to Islamic business operation, activities or transaction. The Sharia is mandated to provide guidance to respective IS on Sharia matters. 4 main functions are outlined, namely Sharia Risk Management Control Function, Sharia Review Function, Sharia Research Function and Sharia Audit Function to ensure the effectiveness of the framework. In addition to the main player of Sharia governance and the 4 functions, figure also shows the lines of the communication or between the main players and the main function. In order to ensure effective Sharia compliance on the part of OIF, there are several principles outlined in the framework. Apart from that, the board of directors is expected to understand the risk of non-compliance with Sharia related to Islamic financial business and operation and its implication for their respective IAS. Although the Sharia committee is a directly responsible gatekeeper and the main responsibility for Sharia compliance rest is with the board of directors. The Sharia committee is required to have at least 5 members, the majority of whom Sharia experts, especially in the field of fiqh and usul fiqh, and at least one whom is a qualified member in other aspects such as economics, finance or business. The Sharia governance framework requires IF Sharia Committee to be accountable to the Sharia Advisory Councils at the Central Bank of Malaysia. The MPS has legal authority to take action against IS if they fail to comply with Sharia guideline and resolution issued since 2009. To facilitate the decision-making process, before IF can always refer to the MPS of the Central Bank if there is ambiguity in the law or immediate settlement. It is quite impossible for IF to fully comply with Sharia requirement, the form and content of the commission transaction and conventional emission. There are many specific issues that require advice of MPS at the central banks. The MPS is called a reference center with legal authority facilitating decision on contentious issue to ensure the uniformity in practice. The Sharia Committee will seek advice from MPS on continuous issue and report to the board of directors on recommendation from MPS. Next is the Sharia framework in Singapore. In Singapore, Sharia management means that Sharia committee are nominated at the institution level and their decisions are only borne by their respective DIF. The regulatory framework needs to be respected with respect to the body that has ultimate authority to make decisions on matter Islamic finance. Overall, a flexible Sharia governance structure is a practice as the country sends over Sharia governance matter to industry players. There are no specific legal provision or guidelines regarding the Sharia governance process. Instead, mandate the respective Islamic financial institution to have their own policies or best policies on this matter. There are a few guidelines on the application of banking regulation to Islamic banking can be highlighted. The first one is Article 2.1 of the guideline clearly justified the use of formal regulatory approach against Islamic and conventional bank because the previous phase is not different from the phase by the latter and many prudential and supervisory issues are similar to it of the latter. Second is Article 2.2 of the guideline as whole state that must use the set of criteria when considering application by commercial bank and Islamic bank to operate in Singapore and its next concern when accepting new players is safety and security from the institution. Item 2.3 highlight that the commercial bank with existing operation in Singapore which wishes to conduct Islamic banking business in Singapore should keep must duty informed if any such plans are being made and notified must before commencing Islamic banking activities. Every bank should have ensured that they are well managed and possess the necessary management capabilities to offer Islamic banking service. However, it's not witty to point out that there is no mention for infringement of the Sharia board. The fourth one is item 2.7 recommends Sharia compliance risk faced by Islamic banks and requires such banks to manage the risk as part of the risk management process. Furthermore, must expect Islamic bank to take into account Sharia compliance matters and to manage the compliance risk as part of their overall management process. Finally, although Section 43N in column 4 of the income tax require endorsement by Sharia councils or body or committee in order to verify that certain debt securities or trust certificate are Sharia compliant, there is no mention of similar requirement for verifying any Islamic banking product. That's all from me. Thank you.
The overview of the selected operators or companies in Malaysia. Opus is a digital value chain finance fintech company with an emphasis on helping SMEs and individuals. While ISLINDOM, they offer a community sharing platform for people to share their medical expenses. Members of the community sharing platform will assist one another in paying for their medical costs. Next is Quantum Metal. Quantum Metal creates a global precious metal exchange that is uniquely legitimate and opportunity-making trading ecosystem that leverage on technology based on the real value of precious metal. Next is the overview of the selected operators or companies in Singapore. StashAway is a digital wealth management that uses macroeconomic data to make investment decisions rather than market fluctuation. Next is Capital Boost. Capital Boost is a peer-to-peer platform with an Islamic foundation that gives prospective investors worldwide short-term ethical investment options for the financing of promising SMEs in Singapore. Takado is a blockchain-powered platform for halal insurance that developed a new type of international insurance for the modern day. The line of services or products offered by the selected companies from Malaysia. Opus offered 3 products which is Gaji Now, Contract Financing and Invoice Financing. While Lindo provide community sharing platform that assists members in sharing their medical expenses through the apps. Quantum Metal provide 4 products which is Gold Storage Account, Gold Convert Account, Gold Enhancement Project and Gold Asset Enhance. Next is the line of services or product offered by the selected company from Singapore. StashAway offered three products, which is general investing powered by StashAway, thematic portfolio, general investing powered by BlackRock, flexible portfolio, and lastly, responsible investing with ESG. While Capital Boost offered three products, which is invest in SMEs company, donation, and get funded. Lastly is Takado. Takado offered building takaful on a DAO structure, which giving both Muslim and non-Muslim an infinite number of possibility to invest in fund.
Now let's move to the issues in the fintech industry for both countries, which is Malaysia and Singapore. Alright, in Malaysia fintech industry, we have found that three main issues which are price competitions, funding factors, and also more startups. Firstly, price competitions. From the most favorable banking such as CME Islamic Banking, Maybank Islamic Banking, they have been conquering the funds and capturing customer bases as well. Notwithstanding the difficulties impacted from the acceptance of Islamic banking, the government of Malaysia also is very looking forward to Islamic fintech. Next, funding factors. Factors of obtaining funds is very important to Islamic fintech since Islamic fintech is newly to the industry. Furthermore, Islamic fintech considered not large in the market yet. People still not intense in the technology and might not be revealed to the world of finance, especially to the SMEs businesses. The last issues in Malaysia fintech will be no startups yet. Since the presence of COVID-19 pandemic issues for the past few years, the people are more likely prefer to digital finance compared to the physical ways of transactions or making payment. To overcome the issues, MDEC, which is Malaysia Digital Economic Corporation, and many other more institutional finance collaborate to assist SMEs businesses in digital finance in generating their capital or profit. After all, Malaysia is not yet to produce startups to be compared with the neighboring countries such as Philippines, Vietnam. At least they're developing their startups at beyond 1 billion. Now let's move on to Singapore fintech issues, where they're more focused on the finance technology itself. There are three main issues in Singapore's fintech as well. The issues will be the settlement and cross-border payment, the multi-CBCD platform, and also the SEG's data system. Now, for the settlement and the cross-border payment issues, they are facing difficulties in cross-border payment since Mr. Ravi Menon also mentioned in his speech last year, which Singapore have to concern about the cross-border payment when a bilateral links needed at one time. Next, Mr. Ravi Menon also mentioned that Singapore have to develop multi-CBCD systems as the central banks are responsibilities in controlling the liabilities systems for the whole fintech system in Singapore. Last but not least, Singapore also lack of high standard ESG data system, which mentioned by Ravi Menon, whom the director of Monetary Authority of Singapore. He also mentioned that ESG data system have to develop in Singapore for the investors to be compliant with the financial factors with fintech technology as well.